What's up, traders? This is Deepak Bangar from Profitable Traders, and today we are going to discuss the fifth reason why 90% of the people lose money in the stock market or share market, especially the beginners, and that is penny stocks trading. We are going to discuss what is a penny stock, why people get attracted very fast to this kind of stocks, what are the practical challenges or issues in penny stocks investing or trading? What is pump and dump trap, which is set for the beginners by the operators in this kind of stocks? And we are going to see how to find out whether the particular company is a penny stock or not. I'm going to give you a couple of examples with a demonstration of the same. At the end, I'm going to tell you what is my take on whether you should invest in these penny stocks or not. So let's get started. But before that, this video is going to be a little bit lengthy, but I assure you it's going to be worth of your time. So whenever you spare 10 to 15 minutes of your time, then only you watch this video. Another thing, if you haven't subscribed to our YouTube channel, I suggest you hit that subscribe button and hit the bell icon so that you get notified on priority whenever I upload the information videos about educational videos about how to become a consistently profitable trader in the stock market with absolutely peace of mind. So let's begin. Let's first consider what is a penny stock. As the name itself suggests, these are the stocks which are literally available in pennies. That means their price is very less. Most of the stocks you can find is less than 50 rupees or less than 100 rupees price. Another definition of penny stocks practically is to on the basis of market capitalization of these companies. So whenever a company has a market cap or market capitalization of less than 10 crores, I consider that as penny stock. And how do I know whether a particular company is a penny stock or not? We can find that out by two methods. One is the screener.in. I'm going to show a demo of how to find out. Okay, so all you need to do is just go to this website called screener.in, and if you don't have an account, you can just create a free account there. You click on the screens button, create a new screen, and in this box of query box, you just run a query of market capitalization. We are going to find out the list of among the list of more than 4,000 companies listed in stock market. If at all I have to find out which is a penny stock, this is what I need to do. Okay, so market capitalization less than 10. So 10 is 10 crores here, and you click on run this query. Once you click that, you will get a list of stocks. So this shows 700 companies, 716 companies which are satisfying this criteria of less than 10 crores market cap. And you can find the name of these companies here. This is their current market price, and this is their market capitalization. For those of you who don't know what a market capitalization is, it is the value which is derived by multiplying the share price by the total number of shares which are available in that particular company in the share market. So that is nothing but the market capitalization. It's sort of a net worth of a company. So this is one method. Another method is you just go to the website called moneycontrol.com and you type the name of these companies. Let's take example. If you want the more information about that particular company, then let's take first example, that is Sharad Fibers. Okay. So I'm going to have details about Sharad Fibers. Sharad Fibers and yarn processors. So click on that. On moneycontrol.com, in this search button, you have to enter the name of the company, and there you will find the details of this company. This is the company which is listed on Bombay Stock Exchange, BSE. This is the current price of this company, and market capitalization also you can see here. So this is how you get the details about the penny stocks companies. Next, we are going to discuss why people are always eager to invest or trade in the penny stocks. If you check YouTube channels, if you check the Facebook groups related to stock market, news media, tips providers, WhatsApp groups, Telegram groups, this is the hottest topic which is discussed is the penny stocks. We are going to see the top 6 reasons why this happens. Okay. First and foremost, okay, as I said, these are the stocks which are always in discussion, especially from the tips from the brokers or advisory services, or these are always in the news. Second reason, people think that these are very cheap to buy. So a stock which is available at 10 rupees or 5 rupees, people think that, oh my god, this is so cheap, I can get more shares. So another reason is they think that I can get more quantity of shares, and if this stock moves from 10 rupees to, let's say, 12 rupees, I get 20% profit. So it's a huge profit potential that people tend to see. But this is not always the reality. Cheap is cheap for a reason, and costly is costly for a reason. So always keep that in mind. Another thing which people think is huge growth potential. Another fifth reason why people get attracted to this kind of stocks is more returns in less time. People think that they can get rich fast by investing these stocks, or they think that they can become overnight millionaire by investing. Even if few stocks, this is what people think, okay, even if few stocks they hit the exponential growth, they can already make lakhs and crores of rupees by investing in this kind of stuff. This is what most of the people think. And last but not the least, rags to riches success stories in the stock market, usually majority of them, they come from these kind of stocks. These are promoted by the advisors or the operators or the tips providers. We are going to see why this happens in the next section, but these are the most common reasons why people are always eager to invest in this kind of stocks. Next we are going to discuss is what is pump and dump trap for beginners in the penny stocks. So usually what happens is, since these are the small companies, majority of them they are unknown, we haven't heard about their products or services, particularly for these companies. So what people generally tend to do is, based on the information that they get about these companies, either it could be news or it could be the tips which are generally circulated through the tips groups, WhatsApp groups or Facebook groups, people tend to fall prey for these pump and dump stocks. These stocks are easily manipulated by the operators or the people with big capital or the promoters themselves, and these stocks are artificially inflated prices. If you know what if you have watched the web series of 1992 scam, Harshad Mehta, you would know what I'm talking about, how the prices are artificially inflated for particular stocks, especially the small companies which price can be easily manipulated. So this is what typically happens. It's a pump and then afterwards it's a dump of the price. So what typically happens is, operators, they have the positions in the stocks already. They start buying the stocks in bulk quantities, and since the volume is not that much in this kind of companies, what happens is, once they start buying in bulk, the price starts increasing. Once the price starts increasing, then again people they get attracted because they see that, okay, this stock is growing very fast. So naturally the buyer's interest gets generated, and then more people buy these kind of stocks. Again the price increases, and ultimately there is a euphoria or there is a mania in the market, and people are literally all over the place on these stocks. They want to buy, they don't want to miss the bus. There is always a fear of missing out on this hottest lottery winner kind of stocks. And that's why once this happens, there are usually, you can see there, the operators or the promoters, they circulate some fake news about this kind of stocks, and that again elevates or increases the buyer's interest. More buyers get attracted to it. There is a pumping of the price of the stock. At a particular point, what happens is, the operator who has already bought this stock at a very low price, He's already in a huge profit, so he needs to sell this stock, right? So whom he is going to sell? If there is not sufficient buying interest, how will the operator or the big short people will be able to sell their stocks and make the profit? So they need buyers. That's why this everything is done, and this is a trap which is created when the price is at its peak. These operators, they literally dump their stocks to these maniac buyers, and ultimately what happens is there is no one left in the market to buy this stock once these operators unhold or they release their positions, buying positions. And after that, if buyers interest is suddenly decreased, there is no buyer, price goes nosedive, it goes down, and majority of the times these stocks, they hit the circuit. Circuit means this is the maximum percentage of movement which is allowed in a particular stock. It is determined by the exchanges. So stocks hit lower circuit day on day, week on week, and if the stock hits lower circuit, even if you want to exit that stock, you will not be able to exit that stock. This is what typically happens, and people get trapped in this kind of stocks. This is nothing but pump and dump trap which is set for the beginners by the operators, which makes people lose huge amount of their capital, and it makes their exit from this kind of stocks extremely difficult. Okay, so this is the pump and dump trap. Now the next topic that we are going to discuss is about what are the issues or the challenges in penny stocks trading or investing. Okay, so 6 most common challenges we are going to discuss. The first one is these are loss making or debt ridden companies. Majority of them, they are already making the losses, they're not making profits, and they are on the downward slope of their growth. There is no growth actually in these companies, and these are loss making companies. They are bound to, there is a risk of these companies getting down the drain. So this is the one practical challenge. The second thing is, since these are small companies unknown to majority of the people, they have suspicious or forged data and the news. So the sales figures or the profit figures, taxes figures which these companies they project is forged one majority of the times. Majority of the time their financial results are unaudited. So the data is, the credibility or integrity of the data or the numbers which they are projecting is already in question. So there is a suspicious or forged data risk in this kind of companies. And many times the news that people generate is fake news majority of the times. Third one is these stocks are easily manipulated by the operators or the promoters because these companies are small, the share price is low, and the relative turnover of these companies is very less. Hence, these are easily, they can be easily manipulated, and that actually is very risky especially for the retailers or the beginners people, because people with big resources, they can manipulate the stocks in their favor. Poor liquidity, fourth reason, or low volumes. What I mean by this poor liquidity or low volumes is there is less rush, there are less buying or selling interest, there is less trading interest in these counters, and this liquidity, it can be seen by few figures which I'm going to show you. Okay, so you just go to moneycontrol.com. We will take example of moneycontrol.com. Now I want you to focus on this particular aspect. What is the volume of shares? Okay, so today only 1600 shares of this company were traded. What is the value in lakhs? That means the turnover today, that is 0.3 lakhs. That means, can you imagine, only 30,000 rupees of shares were traded in this stock, which is extremely low. 20-day average volume traded is 665 shares, which is extremely low. So what happens is whenever you are either buying or selling, there is always a huge difference between the bids and the buying prices and the sellers prices. So whenever there is a huge difference, exit from the stocks, or if you are to buy at a particular price, it really becomes very challenging. Fifth reason is exiting from this kind of stocks is extremely difficult because lower circuit makes it next to impossible, along with the low liquidity. So whenever there is a low liquidity in a stock, it becomes difficult to exit from this kind of stocks because there is a huge difference between the buyers prices and the sellers prices. So the trading and matching between these prices becomes a challenge. And sixth reason, there is a low probability of making profits. Only 2 to 3 stocks in 100 approximately are able to grow to the exponentially well results which people dream of. But what about the remaining 95 to 97 stocks? What happens to them? Most of the companies, they get either they close down, they get delisted, or they remain at that particular price, or they actually lose price more. So they end up in making people losses. Most of the people, what they do, they think, they imagine of making some overnight returns, a particular stock getting 10 folds, 20 folds, and in that anticipation, they buy this kind of penny stocks. But ultimately, just couple of stocks from out of 100, they actually are able to do this. Remaining all the stocks, they go down the drain. So my question to you is, why to play the game where your chances of winning are extremely low? The last point is, I'm going to share with you whether you should invest or trade in penny stocks or not. So you must have got the answer by now, by the discussion that we did. Yes, I do not recommend to invest or trade in penny stocks. I sincerely request you, do not burn your hard-earned money in this kind of stocks. My simple question to you is, why to play the game where your probability of success are extremely low? If I tell you there is a 3% chance of you winning the game and there is a 97% chance of you losing the game, would you still play that game? No, right? So why you want to do the same in penny stocks? So my request to you, do not indulge in penny stocks. In anticipation of getting rich quick, there is more probability that you will get poorer faster by investing or trading in penny stocks. That's all for today, guys. I hope you enjoyed the information that I shared in this video. If you liked what I shared, please do not forget to hit the like button, subscribe to our channel and hit the bell icon, and share this video with as many friends as possible whom you think they can get benefit from this information. Let me know in the comments below if you have ever invested in penny stocks and what was your experience about investing in this kind of stocks. I thank you for your time and I'll see you in the next video. Bye.